monetary policy, the key here is we need a sound money. There's nothing that can bring an economy to its knees quicker and faster than unhinged paper currencies. And those unhinged paper currencies lead to high interest rates, they lead to high inflation, they lead to a huge expansion of the Fed's balance sheet. That's exactly it. We are moving away from monetary stability. We're moving towards an unhinged paper currency again. Taxes were moving in the wrong direction. Government spending were moving in the wrong direction. Monetary policy were moving. Regulation. We have all sorts of regulations that have been imposed on the U.S. economy, especially in healthcare, especially in energy, and in lots of other areas. All again, you want minimal regulations. We need regulations badly. We really do. But we want to make sure that we don't go beyond the specific purpose at hand and create a lot of collateral damage to the overall U.S. economy with unwarranted regulations. And in that sense, we are moving in the wrong direction. We need to deregulate the economy, not regulate. And lastly, and the most important one of all, and forgive me about this because I'm a little bit off from the mainstream on this one, but trade. I mean, the U.S. economy was created by free trade. From 1640 until 1870, for 230 years, the U.S. ran trade deficits. We built our country on importing capital from the rest of the world. I think there were 5 years or 6 years that we had trade surpluses during that whole period. We had trade deficits and capital surpluses. And those years were 1776, 1775, when we were at war with Britain. No wonder they wouldn't lend us money. 1812, 1813, again, another war with Britain. They wouldn't lend us money. And then we had the big canal collapse in the 1840s. Up until 1870, we'd run trade deficits every year. We built our country with capital from abroad, and we had free trade. It really gave us the prosperity we have. And now we see all sorts of people trying to impose sanctions and create trade restrictions and all. Trade is not a political weapon. Trade is an economic policy that creates prosperity. If you want to get angry at a country, use your military. If you want to get angry at them verbally, use your State Department, but leave trade out of the mix. Any impediment to the free flow of goods and services is bad for us. It's bad for foreigners. And this is especially true, Michelle, with regard to our presumed enemies. We should be trading with Russia. We should be trading with China. We should be trading with Iran. We should be trading with North Korea. Now, I'm not suggesting we sell nuclear weapons to them. That's not what I'm suggesting. But once you trade with people, you understand them, you do business with them, you like them, they pay you, you pay them. It's a wonderful thing. And you send them birthday cards and wedding anniversary things and all of that. And you talk over differences. You talk over your problems rather than fighting and shooting. And, sanctions are a very, very bad, crude, vulgar instrument of international policy, and they don't work. We've been sanctioning Cuba now since 1959. What's that, 65 years now, Michelle? And you can see how it's worked. I mean, how Cuba now has seen free market, democratic, pro-growth economics as being the answer, and American, how much we love you. It's false. Never should you use trade as a political weapon in the world economy. You should never do that. You should always use the State Department and the Defense Department, but not trade. Trade is a measure of peace. Bob Mundell, your famous Canadian economist and my dearest friend and colleague, he was my mentor throughout all my years in economics. He, in his Nobel laureate speech, said it was the Smoot-Hawley tariff of 1929-1930 that caused the Great Depression. And it was the Great Depression that caused World War II. It was literally the tariffs and quotas and restrictions on trade that caused World War II. That is his Nobel laureate address. And messing around with trade is the most dangerous, stupid thing I have ever heard. And so that's what we should do is low rate, broad-based, flat taxes, spending restraint, sound money, minimal regulations, and free trade, especially with countries you don't agree with, because we need to have interaction with them and understanding the problem. We can sit there and say, well, you Chinese, you're not treating your Uyghurs well. Yeah, well, you Americans aren't treating the blacks well in Alabama. Have conversations about it. Don't sit there and go, get the mad, nasty, angry person. I could just see Hillary now in her pantsuit yelling about sanctions on these sanctions and we'll get you guys. No, that's not Since Trump left office, we're in 3 wars now at least. We're in the Gaza thing, we're in Ukraine, and we have the Houthi rebels there, and we've got problems in Colombia and Central and South America. We've got problems all over the world in China and Taiwan, all because of this absolutely silly policy of sanctions, protectionism, and using trade as a weapon. That's my lecture. I
All
hope
right. All right, a lot to dissect there, but let's focus on this idea of sanctions and trade and how sanctions and weaponizing the US dollar may, in fact, lead to its ultimate demise because there are concerns that a pivotal point was the sanctions imposed on Russia and kicking Russia off the SWIFT system, that move by the Biden administration set in motion an irreversible trend of de-dollarization and the bifurcation of the global monetary system, so much so that even Janet Yellen has recently acknowledged that sanctions and weaponizing of the dollar will see the world use less dollars. And we're seeing that trend accelerate.
Yes, exactly. That's exactly what I'm talking about.
Right. Since then, we've seen countries think twice about having dollar reserves, and we're seeing countries, particularly the BRICS Plus, actively dumping the dollar, saying that they should be trading in their own currencies. China and Brazil, the world's most populous and the sixth most populous countries, working to trade more in their local currencies, the yuan and the real. The petrodollar is on very shaky ground. The agreement there not renewed. Whether it was official or not is a whole other conversation, but point remains that oil, which used to be sold exclusively in dollars, is now being sold in exchange for other currencies, from ruble to yuan to rupees. In fact, JP Morgan Chase has estimated that about 20% of the world's oil has been bought and sold in other currencies, and that was just last year. We don't have the latest data on where we are in 2024 on that. According to the IMF, another statistic here, dollar reserves held by central banks fell to 58.4% during the fourth quarter of 2023, the lowest level in 25 years. So we've got central banks buying gold at record levels and reducing their share of US dollar reserves. And in May, we learned that China sold off a record amount of US bonds in the first quarter, intensifying its shift away from dollar-denominated assets. Japan also has been selling US Treasury securities for several consecutive months. This trend happening around the world. The BRICS are also actively working on a new common currency, potentially backed by commodities, to move away from the dollar. And many would say that the inflection point was that excessive weaponization of the dollar against Russia after its invasion of Ukraine and the freezing of Russian assets, and then, of course, kicking Moscow off the SWIFT system, that was a pivotal point there. And that was also compounded by the preceding debacle of the Afghanistan withdrawal by the Biden administration and the way that worked out. So where do you see this de-dollarization trend going? How seriously should we be concerned about it and the dominance of the US dollar as the global reserve currency?